Morning, Steve here in Chicago with the morning grain comments. Price was a little bit higher overnight. We also saw some talk that some problems in Libya and this fire in Canada is putting a premium on to the crude oil market. And we're seeing some bounces in the metals again. And so some of this rally that we saw in April in the outside markets extended overnight and may be helping the grains. We're also looking for some maybe some positive export news on the export sales this week. One private group said that the Brazilian second corn crop was going to be down 12% because of the dry weather. They also lowered their soybean crop. Argentina came out and said that 7.5% of their soybean farmland was flooded this year. So all those factors could continue to provide support underneath the market. Sales in wheat expected to be 200,000 to 400,000 tons, corn maybe 1 million tons, old and new crop beans somewhere around 400,000 tons, and I think we continue to be watching new crop beans to see if anybody comes in and buys beans because of the problems in Argentina. Second day of the Kansas wheat tour, they found yields again close to 49 bushels per acre. Last year it was 34. They estimated the Oklahoma crop this year 128 million bushels. There have been some private estimates around 105, and last year it was 99. The average trade guess for next week's soybean carryout is 426 versus the government's 445. For next year, the average guess is 412, and there's a lot of commercials that are below 300. So this could be a little bit bearish if the government comes out that high versus expectations. This year's corn carryout unchanged at 1871. The average guess for next year is 2256. That would be bearish corn. And the wheat carryout unchanged around the 985 number. Next year at 1075, which is also bearish to the wheat. Funds yesterday, buyers of beans and meal, sellers of oil and corn. Midwest 6 to 10 day outlook calls for normal to below temps and normal rains. And one interesting tidbit in the Wall Street Journal, they were saying that the rally that they've seen in the stock market, in the energy markets, in the metals, is not really justified. It's rare for them to see stocks, bonds, and gold rally at the same time. They said the conventional wisdom by traders was that the economies were getting better and that China was bottoming, and that we also the collapse in commodity prices was over. And they said that it's hard to believe when you have a 67% rally in crude oil prices when there's too much supply in the world. So a lot of questions at these price levels at the validity of the recent rally in commodities. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.